U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here, and today I want to talk about how you should be playing the volatility of GME in the current stock market. But first I want to take a few moments and let you know my strategy, because it's important you have a strategy going into every month when you buy stocks. So actually what I've been doing every single month for the past few months is I've been buying my high conviction plays at the end of every month. What this means, I'm talking Facebook, Neo, and Palantir. If I believe that these companies are really the future, and I do, they have been recently dipping since I previously bought them, but that has not scared me away. If anything, that's an opportunity to buy more shares at a much reduced price. And I will continue buying these stocks for the remainder of the next few months, probably until the end of the year. And how much am I actually putting? I'm talking, you can put, when you get your paycheck every month, you can set aside an amount and put it straight into the stock market. For example, at the end of every month, I like to split $500 between the three companies I just said. It can be more, it can be less. If you want, you can also buy more stocks. You should have a baseline and a strategy for how you constantly are putting money into the stock market. Because I guarantee you, if you don't put it into the stock market, you're gonna use it somewhere else. So might as well grow your wealth, use your high conviction plays, keep on the long-term plan that you set for yourself. And now I want to jump right into GameStop and what it's been doing this week since it hit its peak of $190. I'll start off by saying that I knew, you can look at any chart over the past 3 months, that this stock was not gonna hold the $200 price target. It's a cycle. You knew it was gonna go up and you knew it was gonna go down. And so you should have bought options, put options for a price target of around $100 or around $150, like whatever you wanted. It was expensive, but the volatility was almost a given. Now GameStop is currently sitting at around $160, and there's more weight to fall. It can fall down to under $100. It can fall back down to $60 pretty easily. And then guess what? When it hits that $60, $90 range, you buy a call option, riding the volatility back up and making money on the cyclical rise. If it sounds like I'm oversimplifying it, I really am, but it is that simple. And now there's a lot of hype around where GameStop will go next. Ultimately, I do think that this is a good stock to hold, especially if you buy at the lower dips and over the long term. They just announced Ryan Cohen is going to be the chairman of the board. Some big news that we all knew was coming after all the hype around him that really launched the short squeeze of GameStop. He was really the catalyst that launched all of it. And him being now the chairman has a bright future ahead of it as a company. But I think it's important to note that this rebellion that Wall Street Bets has started is still ongoing. Now, I've done a video on the Wall Street Bets war, and I've also done a video on about 7 reasons why GameStop is a good buy over the long term, especially if you get it at a really good discounted price on the dip. But I just wanted to talk about how you can actually make money in the short term playing off the volatility. Because look at the charts, you guys. It always goes back to the charts. Look at what the history of the stock has done. You don't even have to go so far back. Just look at about 6 months ago and then start and see what has happened since Ryan Cohen joining the board in about November. The last thing I will say is a shout out to Wall Street Bets, because all the major hedge funds lost a lot of money on their GameStop short squeeze. And this was revealed more recently in the last few days, as all these hedge funds were now releasing their Q1 numbers, and Melvin Capital actually lost 49% of its investments in the financial first quarter of this year, all thanks to GameStop. And there were a bunch more other names out there, big hedge funds losing a lot of money, and even Bill Huang, who's almost like I think 5 times to 8 times the leverage in his hedge fund position, and it's ridiculous. Doesn't really make too much sense, but you have to know that these guys are against retail investors, and they're playing the game, and we'll play our game, and we'll make a lot of money as well. The weather's getting warmer, but until then, stay frosty, Rebels. Rebel Leader, over and out.